Hi, Kerry here with Best of Us Investors. You're getting your butt kicked this week, aren't you? Yeah, they're coming after you. Remember I told you a couple of days ago that they either had to make their numbers this month of December or lose their job? Well, they're going to make their numbers, and they're going to make it at your expense. They know where your stop losses are. They know that you're leveraged. They know that you bought on margin, and then you bought options, and they're going to kick your butt this week, and maybe next week as well, but there'll probably be a Santa Claus Rally. You got to recognize you're playing in their ballpark. And they make the rules, and they have all the advantage on their side, and they let you play. And then when they want to take your money, they take it away from you. We're in for a bit of a correction here. It's going to be somewhere between 20 and 40%, and it's already started. And it's going to take a little while. It probably will get a rally at the end of the year, as I said, to make their numbers, and then expect them to come right back at you after January the 1st. When their book is clean, they've rallied the end of the year, they got their profits up, they made their bonus, and now they're going to come after you again. And that's what I want to talk to you in this video and prepare you for what I believe is going to happen. And this is based on years of being in this industry. I'm a retired financial advisor. I've seen them do it numerous times, and they kind of work behind a closed door, and they decide what they're going to do to you on a regular basis. If you are trading stocks, trying to make a weekly, a monthly goal on your stocks. If you're long term, you're going to see a buying opportunity. I've moved, I liquidated my Tesla so that I could have some cash so I could be ready for this. And I want to tell you what I'm going to do and what I'm looking for in this video, and hopefully it can help you. That's my goal, to help you make good investment decisions based on my knowledge and my experience, to help you keep more of what you make by understanding the tax code, because you're going to want to take some losses in your non-qualified account and capture those losses so that you can write them off your income taxes in the future. But you need to be knowledgeable on that. And then our final goal is to build family wealth. And that can be done if you ignore the bumps in the road and just plan for the long journey. First of all, I'm not your financial advisor.
Best of Us Investors presents Kerry Griegmeyer.
Okay, I expect, as I say, a 20 to 40% correction in the next 3 to 5 months, and I think we're starting it. The NASDAQ, in fact, is down 7% from its high on November the 4th. The Dow is down 5.8% and going lower from its high of November the 8th, and the S&P 500 is down 4.1% from its high on November the 5th. So we're just getting started on this. And to give you some kind of feel for it, I have a group of stocks that I watch very closely, and I use them as a measurement and also as an opportunity to buy, because I think these are the stocks of the future. As I said, I've liquidated my Tesla. I came out a little too early, but it is 16% off of its high. Facebook's actually already 20% off of its high. Amazon's down 10% from its high. And Microsoft down 6, NVIDIA down 9, and Apple down 5. These are the stocks I'll look for a buying opportunity. Now, if you've been to my channel before, you know that I like biotech. I'm not going to get back in, I'm not going to add to my holdings in my biotech or in my 3D printing. Boy, I'm getting my butt kicked on desktop metals and the metaverse. Although the metaverse opportunities are going to be within the Facebooks, the Amazon, Microsoft, NVIDIA, and Apple. I'm looking to buy into them, each one of them, at 20% below their highs or more. As I say, Facebook, we're already at 20% off of its high. So what is the recipe for a market correction? Well, I think there's several elements to it. The first one is inflation. And is inflation a reality? Yeah, it is. In fact, I was amused. I'm a cyclist. I like to ride my bicycle. That's Fat Bottom Girls from Queen. And there's an article in yesterday's Wall Street Journal. Bicycle makers offer clues on the persistence of inflation. And they're showing that if you want to buy a bicycle, a high-rate bicycle, you're going to pay anywhere from 25 to 50% above what they sold for just a year ago. And they're going to go higher because these bicycles are getting very technically oriented. They're not the Schwinn that we bought some 50 years ago. No, they're, in fact, while we were at the beach this last week, I was amazed at how many electric bikes I saw. A year ago, I can't remember that I saw any, but it seemed like every fifth bike that came past had a baby boomer on it, and moving along at a nice pace and not pedaling. So, and it's interesting, I was sharing that with Nita. I remember in the Tour de France about 8 years ago, a guy fell off his bike in the Tour de France and hit the pavement, and the bike went down, but the back wheel just kept spinning. Yeah, they've had electric bikes around for a long time, but they're now becoming a part of our culture. And I think what I read about in this article about how they can't get the parts, they can't get the batteries, they can't even get the handlebars for them. And so the bicycles are increasing at a rate of 25 to 50%. And that's just kind of a guide. You're seeing the same thing in cars. Heck, gasoline is up 25%. It used to, when we went to the beach, if I put $25 in my tank, okay, now it's 50, and in fact, coming home, it hit 60. You got to be careful which state and which county you buy your gasoline in as you travel. And then interest rates. As interest rates go up, and I think we all know they're going to go up, there will be a movement away from stocks into bonds as people seek safety. And when I say safety, anytime something comes up like a variant on a coronavirus, fear hits the market. And when fear hits the market, people go to safety. If interest rates are going up, that safety is all the more appealing. So I think the other element of interest rates going up is if you've got any zombie companies that are in heavy in debt, their debt service is going to go up. And when you're dealing with interest rates at, let's say, 3%, and they go to 6%, well, your debt service just doubled. So that's going to put pressure on the stock market. So you've got inflation, part of the recipe. You've got interest rates going up, and I don't think anybody doubts that interest rates will go up. And then you've got valuations. What are the valuations of companies? Well, right now, the PE ratio for the NASDAQ market is 35. On the S&P, it's 28, which Normally, historically, it would be 15. So it's about a 95% increase in valuations, and that's over the last 10 years. And if you've seen any of my charts where I've shown you that the government has pumped so much money into our economy, which has pushed these evaluations up to where they are 95% higher than they historically have been. Well, when that gets that far out of whack, you can expect a correction. The Dow, the PE ratios are also at about 28. Again, almost 100% higher than 10 years ago, the history in front of us. So what does that all mean? Well, and then I want to go back to where I started. You are playing in a professional, you're an amateur. You and I are amateurs playing in a professional's ballpark. And when they have a need to take our money away from us, they know how to do it. They have better technology than us. They know where your short positions are, and so they can start selling some of their holdings merely to trigger your short position and or your stop loss. So they will hit your stop loss and take you down. And as they take you down, they take your sister's stock price down, and your brothers and your uncles and your grandfathers. It's just a domino effect until there's no more shares to sell. And it's initiated by the Wall Street biggies to get this down. Now, as I told you, one of the reasons they are getting it down is they haven't made their numbers. The hedge funds particularly, if I've got $1 million to give to a hedge fund, I get charged 2% of my million just as a fee, just as an entry ticket to get in. And I get charged that every year, 2% up front. And then they make 20% of any of my gains. Well, if they haven't given you any good gains thus far this year, you're going to fire them. You're going to fire them at the first of the year and say, I'll just go to mutual funds and Kathy Wood's ETFs, although she hasn't done that good this year as well. And so they have a motive today to take your money and push this stock market down as fast as they can and as far as they can and get it down to a 20 to 40% correction, if they can, before the end of the year, so that then they can buy in and push the prices back up before the end of the year so they can make their bonus. That's the ballpark you're playing in. And this is not Little League Baseball. And this is not Pee Wee League football. This is the Super Bowl. And you enter the Super Bowl and the what's baseball, the World Series every day. Every day you go in and you play the Super Bowl and the World Series against the best in the business. So you've got to expect to take a beating when they want to beat you. And this week, they've been beating on us. To lose 3% a day is not unusual. Don't know how I'm going to end the year, but I'm going to sit tight on my holdings. I've got some cash, and if I see Tesla, Facebook, Amazon, Microsoft, NVIDIA, and Apple drop below 20% off their highs to 40% off the highs, I'm buying. Okay? That's my tactic. I know what's happening. I know why it's happening. And luckily, I don't need it to buy groceries. All right? So that's my take on the market. I'm a purist. I probably won't buy an electric bicycle anytime soon until my legs give out that I can't pump. And I will stay in the stock market because I understand what's happening. And really what warms my heart is I know the world is going to change so dramatically, and our medical field is going to change, and the metaverse is going to replace the internet, and 3D printing. God, I hope my desktop metals comes back. But I know it will. I just hope I live long enough to see it. All right, let's go into this weekend and expect more of the same the first of next week. And then I suspect, as I say, they've got to make their numbers. We'll have a Santa Claus Rally, and we'll all have a Merry Christmas, and I'm not so sure about the New Year. Talk to you about it a little bit more when I get it figured out.